tell us how is the market setup really looking like? We've had 5-6 days of consecutive recovery. We are seeing 23 600 back on the screens, and I want to know FI is returning, with favor as far as Indian markets are concerned. Do you think things are now seeming to be in a better shape, and FY26 could start off with a bang?
Yes, on this channel as well, I have been consistently saying that market should bottom out by March end. I was lucky enough to see, my strong conviction becoming true. Of course, this was based on the certain fundamental and logical factors. And the same factors make me to believe that worst is behind us. Yes, there could be profit booking here and there, minor correction can happen, but the kind of crisis we saw, is not likely to happen again unless monsoon fails miserably. Why I call that as a crisis? Because the overall market cap about a few weeks back fell as high as 100 lakh crore, and that was about 1/3 of India's nominal GDP for the current fiscal. So right now, we have recovered a lot. In fact, we have recovered about 30 lakh crore after falling 100 lakh crore. So still we are 70 lakh crore down, but I am not visualizing any scenario where again this can become 100 lakh crore. The reasons: one, the FIs have come back. The rupee looks like it's quite stable now, and also the H2 numbers, whether it is a GDP or corporate earning, they are likely to be better. And investors inflow, the new investors inflow, despite the market falling or crashing, the last 4 months they have been coming to the market at the rate of 4.5 to 8 lakh investors every week. That is also positive. And the trade war also to a large extent discounted. Yes, the trade war would continue for 1 more year, but it will not be in aggressive tone because US market has given up all the gains, and definitely there are signs of deflationary condition because of the trade war in terms of job cuts, etc. Small businesses are going through a difficult time. So it's a catch-22 situation. They cannot give up the trade war because the trade deficit is more than $900 billion per annum. So at this rate, it can touch easily 1 trillion, and then in 5 to 8 years, the US economy can be into major crisis. So it will continue, but it cannot be so aggressive that will impact the US economy, and it cannot be so aggressive against India as well, because politically, US cannot go on doing very aggressive measures against both India and China, which are the world's largest countries in terms of population, and also in terms of economic parameter. India is passing a trade deficit to the tune of $48 billion in CY24, whereas China accounted for $361 billion of trade deficit to US. So we are not such a major cost for the pain of US. So considering all this, and also year end when markets are down, a lot of people do restructuring of their equity assets, rebalancing and selling the loss-making shares and rebalance the asset. So all those pressures would end most probably today. So therefore, I am seeing a situation where we will see a significant recovery from April first week. So next 6 months, I see quite a robust outlook for stock market, and that should be led by small and mid-cap stocks.
If you like the video, do like, comment, share and subscribe.